Let me ask you a question. Do you own a rental property that's done so well for many years, but lately you found yourself wondering if it's still worth it? You know, the tenant calls and the complaints and the repairs and the vacancies and the property taxes, the insurance, the maintenance, and then there's a tax bill. For many owners, the property isn't the problem. It's like they feel trapped between two bad options. One being keep managing the property they no longer enjoy managing, or two, sell it and write a very large check to the IRS. In property decisions, we talk about asking better questions. And one of the questions I often ask owners is, what if there's a third option? For some owners, there is. It's called a Delaware Statutory Trust, or DST. Now, before your eyes glaze over, and let's keep it simple. What is a DST? Forget the technical definition, but here's what most owners experience. They experience selling a rental property and no longer dealing with the tenants, the toilets, the termites, the repairs, property management issues, or even vacancy concerns. Instead, you own a fractional interest in professionally managed real estate, large apartment communities, industrial properties, medical buildings, distribution centers, properties that most individual investors can never purchase on their own. You still own real estate, you just stop managing it. It's that simple. That's the experience most owners are looking for. So how does a 1031 exchange into a DST actually work? Well, let's keep it simple. There's 3 simple steps. Number 1, you sell your investment property. Number 2, you complete a 1031 exchange under the Internal Revenue Code 1031 so you can defer your capital gain taxes. And number 3, exchange into 1 or more DST properties instead of purchasing another property that you may have to manage yourself. That's it. The important thing to remember is this: you're not cashing out. You're exchanging one investment property for another form of real estate ownership. After every step, I encourage owners to come back to the real question. What experience do you want your real estate to provide for you? What does the income look like? Every DST is different. But for many owners, they tell me that the biggest change isn't the income, it's simplicity. Before, they experienced tenant complaints, repair calls, tenants leaving and you have to find another one, vendor management, property taxes, insurance decisions. But after they experience regular monthly income, professionally managed assets, no day-to-day involvement, no complaints, no repairs. The goal isn't always maximizing return. See, for many of our owners, the goal is to maximize freedom. So the question becomes, how much time and energy and stress am I willing to exchange for a little more income? Why don't most financial planners actually talk about DSTs? This is an interesting question. See, many financial planners know about DSTs. Many have access to these DST offerings, and yet they don't always bring them up. Sometimes it's because they're more familiar with stocks and bonds and other assets that they manage. Sometimes it's because DSTs are considered an alternative investment. Sometimes it's because the client's real estate isn't really part of the assets under management. The most important thing is not whether someone likes or dislikes DSTs. The important question is, does it help solve the client's problem? See, in property decisions, we believe that solutions should be driven by questions, not preferences. Who is the DST not right for? Well, let's be clear. A DST is not for everyone. It may not be right if you enjoy active management of your rental properties, if you want a complete control of every decision that is made around that property. It may not be good if you need immediate liquidity, and it's not going to be good if you want to force appreciation through renovations and active management. And it might not be good if you're seeking highly aggressive growth. See, a DST often is designed for the owners who want value. A DST is often designed for owners who value simplicity, tax deferral, passive ownership and management, income, professionally managed assets. A DST is not the answer for everyone, but for the owner who is tired, for the owner who feels trapped, for the owner who is afraid of tax consequences of selling, it can be a powerful tool that solves 2 problems at once: the management burden and the immediate capital gain tax burden. See, the goal is not to convince you to do a DST. The goal is to help you understand all of your options before you make a decision. Because once you know your options, you can make better property decisions. So download the complete DST breakdown in the bonus kit at free.danihara.com. And before you make any decisions regarding investment properties, visit propertyinvestmentcalculators.com. And you'll find 2 free tools that'll be very important for you. One is a capitalization rate calculator that'll determine the value and the return on your money. And the other is your capital gains tax estimator, about how much tax you'll actually pay if you fail to do a 1031 exchange. So you're going to want to run them both, because the best property decisions are made with clarity, not assumptions.